keeping on the types of users that you have in the cryptocurrency area, Anish, I want to turn this over to you because there's people that do deals through cryptocurrencies. There's people who trade cryptocurrencies, and then there's the people who are involved in mining Bitcoin and cryptocurrencies. Anish, what's that all about? How do you mine, and what do you need? What tools?
Okay. I don't have a miner. Actually, upstairs I have a miner. I have a butterfly one and a 21 here. So, anyways,
explain what that is. What are you talking about?
Oh, sorry, butterfly miner. Butterfly miner is an ASIC miner. It's from Butterfly Labs. You can mine Bitcoin. It's no longer worth this, worth this value in that sense. At one point in time, it was worth real money. Okay, let me go back and describe why we need mining. So the thing about blockchain is the fact that we need to achieve consensus. So for example, in this fora, if we were all allowed to speak at the same time, this would be a huge mess. So now we have a consensus. This is like a known consensus. This is like a proof of stake. You run this thing, okay? So because of that, you actually have the ability to say things to other people. Say, I'm going to kick you out, and then you can enforce your ruling, right? So that's one way to implement consensus. The other way to implement consensus is when you have no trust, which is the case of Bitcoin, is to ask people to do something hard. So in the case of Bitcoin, it's actually solving a problem. Solving a problem is essentially doing a hash function to find a particular answer to a particular hash function challenge. And to do that, you need to use machines. And as I was describing, the normal machines like what we are using right now are not very fast at doing certain hash algorithms like SHA, because there are different classes of hash algorithms. And the mining thing, again, has different classes. So the ASICs that I was describing are pretty much aligned to the Bitcoin space. But if you look at the GPUs, which are the graphics cards, those are aligned to doing either Ethereum mining or mining for Zcash or other ones. So all of them, if they use proof of work as a consensus, what they're trying to do is the one that actually has the ability to solve the problem first, gets the vote to say yes to something. So that allows you to get to a stage where everybody has like a unified answer. So if we had this scenario, which we are running right now, and we all had this SHA challenge, we were asked to find like, okay, get so many zeros in the SHA thing, and we were given a block, and everybody runs it. The first one to actually get the answer would put their hand up and publish it, and everybody can verify it. And they would actually get the chance to say what's right, right? That's literally what it is.
Got it. Got it. Okay. And looking at the other terminology surrounding cryptocurrencies, Federico, let's turn to you. Initial coin offerings, ICOs, which is basically unregulated fundraising for cryptocurrency ventures. How does it work? And we've heard all sorts of noises in the past week or so, particularly from China, from the US, about regulation of ICOs, China saying that this stuff is illegal. What's the outlook in terms of regulation there?
Okay, so first, to understand what an ICO is, it's good to understand first how the internet is built right now. So we have like these big platforms like Facebook, who has like 2 billion users, Uber also, and these platforms have an owner, right? And we are all users in this big global platform. Imagine if there was to be a Facebook that would be owned by the users, where each of us would have a stake at the platform and would have a part of the governance, right? So a startup team decides to do this decentralized Facebook, and they have to they write a white paper, and they say, so this is how we are going to build this product. So, and we want a community. If you are interested in having this platform become a reality, you can help us do this product. How can you do it? Okay, you can give us money so we can develop this open source project. Remember that open source project always had a lot of problems in getting funding because of difficulty in competing with Silicon Valley companies in salaries, etc. So this group of entrepreneurs, they do the white paper and they say to the community, we want to build this. And then they do an initial coin offering that they sell some tokens that have some use in this platform, and people give them money, and they can use that money for hiring the team and building the product. And in exchange, so the users will have some tokens that have some value for the platform, and they give them governance rights. So this big, like Facebook, is going to be like a government, like a cooperative, where every of the users have a stake at the platform and can make decisions. So this has created a lot of buzz, since some of the initial coin offerings have raised like $150 million in a couple of days. And so regulators have started to look at this and say, hey, what are these tokens really? Are these tokens some governance, some thing that people use for the platform? Or is this token really some kind of security that should be regulated? So this is very new, and different regulators are trying to figure out what this is all about and then how to intervene in this market.
Okay, and I guess when you think about cryptocurrencies, the reason that it hasn't yet touched the great masses out there is that you don't go into a store and generally buy your goods in Bitcoin or Ethereum. Brian, let's turn to you. How do you see this evolving? Do you see that you will have more companies taking up cryptocurrencies and using it in their transactions with everyday shoppers, for example?
Well, it's a great question, because a lot of the mythology around cryptocurrencies is because the average person doesn't get to see it. They hear about it on tech blogs, they hear about it on Twitter and podcasts like this, but they don't really get to confront it or interact with it. You know, so Slave Free Trade, we have a very strong focus on the consumer market, because what we want to do is boost retail sales of slave-free products. So we see that the uptake is happening in retail, but it's really slow. You see ATMs coming, for example, in Japan. You can see point of sale applications like BitPay being developed, but it's slow principally because of the really quite substantial obstacles. And I reckon generally companies are waiting to evaluate if those obstacles can be sufficiently overcome before acting. And I'm talking about volatility, transaction costs, integration with the existing economy, security, and appreciation. Appreciation being, of course, the incredible rate at which the value of the coins is increasing. So with volatility, a great example is, you mentioned before, that Bitcoin just dropped 25% on the China ICO ban alone. And I think it was only about a month ago, Ethereum dropped 4 billion on the rumor that one of the founders had died in a car crash. So, and so Bitcoin is either, Werner alluded to this before, Bitcoin could either crash or burn or hit $100,000 per coin in the next 10 years. It's not a game for the faint-hearted. So I think one day you can go shopping with a Lamborghini for your Bitcoin, and the next just a loaf of bread. So for consumers and retailers, that's a rather huge problem, I think.
Yeah, yeah.
Integration with the existing economy is a problem, because I mentioned before that the ATMs are slowly coming and so on, but being able to pay at point of sale is pretty complex. You know, you have to set up a digital wallet, gain access to a cryptocurrency exchange, and start buying up coins, etc. It's not for the average person. Security is still considered an issue by some, and appreciation. The values are rising so significantly with cryptocurrency. Nobody wants to spend them. How do you have a currency that nobody wants to spend? And if nobody wants to spend, how can they be useful for retail? Buying depreciating assets with fungibles, and fungibles with appreciating assets makes very little sense. So this is one of the issues.
Okay, now cryptocurrencies is one of the products that blockchain feeds, but of course blockchain is much wider than that, and all of the panelists here have activities in the wider world of blockchain. I like the way one participant in this webinar put it. She said, I hear of blockchain everywhere, but what is it? How does it build on what we have right now in terms of solutions? Why can pre-existing technology not provide the same service? So Vanessa, I don't know if you want to take a crack at just explaining what blockchain is and how it differs from what we've seen before.
Sure. Blockchain is really a shared source of truth. It's a unique database where everyone can tap into, whereas before you had several databases which were unique source of failures, whereas right now you have a unique shared source of truth that is totally distributed, and whereas if one database is attacked, the others remain. So there's no single point of failure, and therefore it can be distributed everywhere. And that's really the beauty of blockchain, where you don't have one single point of failure. That means that everyone can tap into the information, and you can share your information selectively or not to the different parties you interact with. And that's really, and you can do it in a really secure and robust way. Whereas before, this was prone to errors and to manipulation.
Okay, and in terms of the participants in blockchain, is there any way to put a number on it, or just how big is this world? Is there any way that we can tell? Is there any evidence?
Yeah, so right now it is anticipated, for example, in the financial services that, last year all the banks were doing POCs and trying to understand how they could use blockchain. It's anticipated that 15% of the world banks will be going into live production. So that's a huge amount of adoption for the blockchains. Just to give you an idea of the consortia for the enterprise side, we run with the Enterprise Ethereum Alliance, the largest consortia in the world. We have 150 members. Hyperledger and R3 also have very large number of Fortune 500 companies that work together to find blockchain solutions. So you have around 500, 600 of the largest companies in the world who are working together to deploy blockchain solutions, and that impacts millions and millions of lives throughout their customers, their supply chains, and their day-to-day operations.
Okay, and Anish, if you maybe can put a bit of perspective on that from your side of things. Vanessa's told us about how blockchain ultimately is reaching millions, but like I was saying with cryptocurrencies, you don't find the person going into a store and being confronted with it. So how long is it, Anish, until we reach critical mass where we see truly large-scale acceptance of blockchain within business to business? What factors are keeping this technology from the mainstream?
So I think some companies like Expedia, Amazon, Overstock are already accepting cryptocurrencies. I think right now it's the people who are really comfortable with the wallet, with using crypto credit cards who use it. I think making the wallets easy, consumer friendly, and the crypto credit cards user friendly is really going to be key, because right now, going into an exchange, opening the wallets, understanding the whole process is it's not an easy process. Like if you're not used to it, if you're not in this world, it's really not easy, and it can scare you off. So really making that user-friendly is going to be the key to that, and making it also very secure, so that you don't have to maybe have a physical wallet. Bridging that gap is going to be key. I think bringing it to the consumer, and also lowering the cost.
Anish, your perspective on this, please?
Oh, sure. I mean, I very much appreciate Vanessa's perspective, but I have been a cryptographer and I have a reasonable expertise, like more than 17 years in doing cryptanalysis and security. So I would probably disagree with Joe, the guy who runs ConsenSys, and with some of the things being said. And I've been somewhat veteran in this space. I've been advising Ripple for 4 years now, and I've been involved in various projects. So there are adoption that's happening. There's also resistance to change. So the use cases where disintermediation is happening all the parties that are involved have no real incentive to make that happen. That's part of the problem where this real adoption is not happening. And the other thing that needs to happen is the fact that identity needs to be sorted out. And I'll give you an example. I mentioned this while I was on the panel in New York, that if identity gets onboarded in places like India, the next thing to happen is just use that to get on a blockchain. Andhra Pradesh has already announced they're going to do that. And for them, they have all the layers that's necessary to do that. They haven't done that on a blockchain, but transitioning from a non-blockchain architecture to a blockchain architecture is possible and is relatively easy if you really know what you're doing. And the best use cases for doing like disintermediation in that sense is, for example, currency transfers, right? Think if you are in the UK and you want to pay something, the charges that you have to pay, right? It's 3 to 4%, sometimes more than 10% for just doing a transaction. If you were using a cryptocurrency to do that, you literally disintermediate all the intermediaries that's between you and the endpoint. And that's like a real thing. And things like that could be easily adopted. It's just the fact that there's no real incentive for that to happen is actually preventing that from happening. I'll give you one more example just to complete it. So think about a case where you get on a flight. You normally have flight insurances, right? The insurance that is supposed to be paid out if you actually have a delayed flight or you miss a flight or your baggage is lost. Blockchain would actually allow you to have those things on a smart contract. The smart contract will literally take care of the whole form filling exercise and would literally allow you to actually have your insurance transaction be completed once an event happens, which is contrary to whatever that insurance statement says, right? So things like that could be easily adopted. People have been working on it. But again, the thing is, like, if there's a significant change in the whole ecosystem, all the regular players that are in the ecosystem have resistance to change and they try to resist it. But, when critical mass happens, I think, that adoption will be automatic.
Okay, so really great examples. And Brian, I want to turn to you because your whole world is about tackling modern slavery using blockchain. Just illustrate how blockchain helps with that, how it works.
Blockchain is able to store information and provide consolidated responses to what we need to know about what's happened in the background of a product. So the blockchain in global supply chains is revolutionary. I think this is I think everyone would agree that it's one of the areas that will be most hugely shaken up by the advent of blockchain. And this is why companies like IBM, for example, have focused very strongly on projects in this sphere, because there's a lot going on in supply chains. There are a lot of frictions that can be sorted out with blockchain. Blockchain, however, it depends what you want to achieve from it, whether it's going to be extremely useful, whether your intention is for a rigid application of it, or whether it's just to find out certain things about the supply chain. So with us, for example, trying to end modern slavery in global supply chains, we need rigidity. We verify the supply chain a bit like a chain of custody of evidence in a criminal trial. Once you break that chain of custody, it calls into question the reliability of the evidence itself. So with the rigid continuity needed to do what we want to do, lack of participation in a blockchain application on the supply chain can endanger the success of the project itself. But as I said, not all projects need to have that rigidity. There are a lot of applications on the supply chain to track products that don't need that sort of very, very careful observation of what's going on and control of what's going on.
Federico, tell us about the application to your world, which is to do with justice.
Sure. I think that the economy today is like very globalized, right? And many interactions and contracts are across borders. Imagine I am in Argentina right now. Imagine I want to hire a software developer from Guatemala. So we do a contract. He's going to build something for me. So we do an agreement. So he built it, and then I'm not happy with the product. And he says he did what was expected of him, and I'm not going to Guatemala to hire a lawyer and like sue him, because it's too expensive for like $500 or $1,000 problem. So imagine if we had agreed at the beginning that in case a dispute should arise in this contract, we should like press a button and send it to a platform that's called Crowdjury. right? So this platform is going to be built on blockchain because it's going to be all secure. All the evidence is going to be securely stored. And then it's going to choose a number of jurors who are going to analyze the evidence, and they are going to see who is right, and they are going to vote, like 5, 7, 11 jurors. And then depending on the vote, it's going to happen. So there is one winner and one loser, and like the winner may be compensated by the loser or whatever the contract stated should happen. So, and this is an example of an application of blockchain beyond cryptocurrencies, because it's not a monetary thing. It's an organization that works automatically and in a secure way. And you know what? The good thing is that nobody can tamper with the judicial process here. Even if I wanted to change or to select the juries, I couldn't do it because it's part of the community and there is one single ledger of truth that is going to operate all this.
Okay, and I imagine from emerging markets perspective, particularly, this is possibly an area of comfort that, you know, you don't have to rely on sometimes in a country where you can't trust the court so much. You've got a decentralized method of justice. But I want to turn to Werner to develop that thought a bit more, because OnFrontiers as a platform is focused on frontier and emerging markets. And what I want to understand now is really the application of cryptocurrencies and blockchain to developing countries. Which ones are leading out there? For example, we've heard in the news lately about Venezuela, the tanking of the bolivar, and that's driven a lot of people to cryptocurrencies and also mining Bitcoin as a way to make money. Werner, where do you see developing countries having the greatest take-up and applications?
Sure. I think let's first talk about take-up and then maybe a little bit about regulation, because emerging markets often see things that could be a potential threat, maybe in a different light. So Luno is an emerging markets company. That's our origin, because very early on we realized that digital currencies, and particularly Bitcoin, has a lot of potential. So you'll often hear about the leapfrogging in Africa. So you'll for instance have a continent that never really had, let's say, landline telephones, and then suddenly they jump and everybody has a cell phone, and there's a 104% mobile phone penetration. So Bitcoin or digital currencies like Bitcoin holds a lot of potential in two cases. The first is the utility, like using a digital currency as a means of payment. It's very cost ineffective to use the traditional banking system, for instance, to transfer small amounts of money from many emerging markets to other markets, and vice versa. So certain digital currencies hold the potential that there's utility, that somebody now, they never had another way of making a payment, and now a digital currency unlocks that. This actually predates Bitcoin, and Kenya has led the way, where the majority of the population uses what is called M-Pesa, which is just mobile money on your phone. It's still a centralized version of a digital currency, so it's not decentralized. It's not a cryptocurrency, but we often see these things in emerging markets. So the strongest use case beyond using it as a means of payment, is using it as a store of value. So in the 9 odd years since Bitcoin was started, a lot of emerging markets have been declining significantly in the way that currency stores value as measured against the US dollar. So we're talking about countries like Nigeria, Indonesia, Malaysia, my native South Africa, a lot of countries in Latin America. And generally there, it's fueled from the individual, from the person who holds money, not necessarily from the government. But these are some of the countries where we see the biggest uptake in digital currency, like an organic growth, because it's better in some instances to put some of your money in a different store of value than the local currency, just because of your currency declining in performance. So there's been a few other interesting cases. Like, I think maybe we can talk about the regulatory side. Like, governments can do one of three things. They can endorse something, which is quite risky, because there's always the risk that it might fail, and then you have, like, angry citizens. Or you could ban something outright and say, we don't want any of this, we deem this a threat either to our citizens, they'll lose their money, or threat to our existing banking and payment system. Which is also a stupid thing to do, because in the case of decentralized digital currencies, you can't effectively ban it. You can do certain things to put pressure on it. And the third thing to do is just to do nothing, to take a wait and see approach. And this is generally what you see in financial services, is big regulators like the FCA in the United Kingdom, or the SEC in the United States, will make a ruling on something, and then a lot of other countries mirror it. So in terms of regulation, Russia initially deemed Bitcoin illegal. They very fast, or over the past 2 years, backtracked, and is actually quite pro-Bitcoin and pro-digital currencies at the moment. So for most emerging markets, I think these things are pushed again from the bottom up, but there's not one of these, no matter how small the market. Every country, we've been talking to regulators, and every bank and every regulator around the world is aware of it, and they're monitoring it. They're basically trying to see what it's going to become, and how to regulate it in the future.
Okay, Brian, I want to get your perspective as well. We had a great question from Marvin, who I think we've answered some of the question from Werner that you got about which countries are leading in terms of cryptocurrencies. But I want to ask Brian, and we've also touched on this with Werner, about monetary instability and devalued currencies being a force for people going into cryptocurrencies. What other forces are there within the emerging world, and basically who is leading the way?
Headlines recently.
Yeah.
Oh, sorry.
You're back on.
Okay, I'm here. Good. I think it's a great question, and it's a tempting idea, given some of the headlines recently, to think that the phenomenal growth or uptake of cryptocurrency is led by instability and poverty. But all the evidence at the moment points to the single biggest driver being uptake by the middle and upper class self-interest, frankly. Factors like wanting alternative or new stores of value that Werner just mentioned, the low cost of remittances compared to the very expensive remittance systems otherwise, the ability to provide financial services to people outside financial systems, and even cryptocurrencies for humanitarian goods. So slave-free trade, we're developing a digital currency for social impact. These all have a role, but in fact the possibility, the greatest potential lies in continuing uptake in emerging markets by the middle and upper class. It's frankly the single biggest class of users is people with money, sending money back to themselves.
Okay, Federico, I want you to jump in from an Argentine perspective there, if you can.
So yeah, I am from Argentina. And this is a country which had a lot of monetary problems in the history. Like in the 80s, we had like 1,000% inflation a month, and then in the 90s we had like deflation, and then the banks kept confiscating the money of the people. So this made people be very aware of what a bad currency can do to the economy. So when Bitcoin started in Argentina, and in particular in Buenos Aires, a very important community of developers was formed. And there are many thriving companies here in Buenos Aires. And one of the founders of Xapo, that is a leading Bitcoin bank, is from Argentina as well. So it's a very important thing, how your country and the history, how it has in the past problems with currency.
Yeah. I wanted to add also the role of the government. So we've seen in other emerging countries like Dubai wants to put everything on a blockchain for government service by 2020. They've been leading the way in that respect. Other governments who have very young populations who are keen to and very receptive to new technologies like Rwanda are going to be more keen to adapt blockchain. That's the type of governments that I see are going to be more receptive. And then I see also countries with very large young populations like Nigeria, I think are fertile grounds for these new type of technologies. And I think education, and we have the chance now to be able to educate developers online for blockchain will be the key to adoption of these new technologies on the ground.
Okay, and Vanessa, on talking about a country like Nigeria, is there a context in which cryptocurrencies and blockchain can help financial inclusion from people that are underserved or are poorer? How significant is that kind of solution in reality?
I think there's in Nigeria, there are some really advanced solutions, you know, to pay your bills directly on your phone, etc. A blockchain layer can be adopted to that. I don't know if they even need the blockchain directly. So there are really great business opportunities, I think, in that space. Then in terms of financial inclusion, basically, the more you prove that you pay your bills through your phone, and the more regularity by which you pay, that it creates your credit history, etc., and allows you to build financial capacity. So it's a virtuous circle for financial inclusion.
And do you see this briefly as a tool for international development in Africa and Asia, for example?
Yeah, absolutely. And
where's the greatest traction and which kind of products?
And not only for financial inclusion, but also for healthcare, health records, and also on the supply chain side to track medication and you know, the fraud that is to combat fraud against false medication. So that's a big thing right now that blockchain could be used for.
Okay, and I imagine, Anish, I think this is a question for you really. There's going to be gaps in making this happen on the scale that, you know, perhaps Vanessa would like to see it happen. What partnerships need to be forged for this technology to be effectively implemented? For, you know, I'm thinking, for example, of the UN, of business groups.
Yeah, I think there's two parts to it. The first part is, I just wanted to say this before, given Vanessa said that. I used to be, my first degree is in medicine, and I have a license to practice medicine. So I know how medicine gets practiced both in the West and in developing countries. So there are a whole bunch of constraints which are not really related to the technology that actually prevents it from happening. And consent, which is very key in healthcare, is not easy to replicate in blockchain. And technology-wise, that's this line that ties the whole two arguments together. Technology-wise, as it stands right now, we don't have technologies that scale that can actually provide, you know, the privacy or the consent at the speed or the rate at which we can actually do this in a paper or pencil or whatever the current mechanism is. It's the first thing. Once we have those things in place, yes, then the relationship between governments, whether it's development agencies or the governments of the country. To me, the governments of the country is pretty key, because they could actually do the identity verification and onboarding. Once that's actually done, then all the major challenges that we actually have for financial inclusion, which is essentially being able to distribute the social security through blockchain channels or related channels, right? That could be easily done. And similarly, if you are providing healthcare, again, the same thing could be applied. But again, what I'm saying is, like, you know, if you look at the amount of transactions per second that's being currently supported by any of the different blockchain flavors, we would find it a struggle to support not 7 billion, say even a few billion people having to do every transaction of their life using any one of them, let alone other things, let alone privacy, let alone other, other higher levels and higher layers of abstraction.
Okay, we've got a few questions coming in from the participants here. So I want to ask one from Greg, who's curious to know if there are advancements in venture capital or early stage impact investment that leverage blockchain and cryptocurrencies. And maybe Federico, if I can put that over to you, to also look at the opportunities for crowdfunding initiatives, if you can look at that kind of scope there.
So yes, there has been a very big interest in blockchain from venture capitals. So there is a big fund called Polychain from Silicon Valley, and Vanessa can tell me this, but I think ConsenSys just announced a $50 million fund for investing in crypto, right?
Yeah.
So yes, there is a big interest in the space as in a very new industry that is going to shake the world. Of course, the venture capitalists are going to come, and there is a very good opportunity for people having good ideas and the ability to execute them to get funding to make the projects. So this is a very good space to be in right now.
Yeah, okay. We just hired Kavita Gupta, who has been a long time very impact investor. She worked at the World Bank. She's been managing Eric Schmidt's impact investment fund, family office for the past years. And she's in the same network as I am, the Nexus Impact Investing Group. And basically, we believe that, you know, blockchain in itself is so impactful. But we want to direct, you know, this $50 million fund to, you know, really drive impact. Blockchain for Social Coalition also has this this challenge, this hackathon, which is basically a mini incubator for a month with 500 people who are set to solve 4 challenges over the course of the month of September on supply chain, identity, energy, and basically, you know, we'll invest also in those challenges. That's what we're about, and I think, you know, the promise of blockchain is also about that.
Okay. Question for Brian, I think best tackle this. What's the scope for remittances via blockchain? How do you see that opening up? You're muted, Guy.
Still in.
You're back.
With the muting, yeah. So I think one of the interesting things about remittances is that is some pretty basic economics, that high transaction costs constrain any market. That's a simple thing. And the current costs of remittances are holding back migrant workers and developing countries. But blockchain does hold an answer to that if the technology is allowed to reach those who need it. So remittances are a major, let's say, financial lifeline for a lot of emerging economies. I think it's fair to say. Out of 500, almost 600 billion in remittances in 2015, 430 odd went to developing economies. But the costs of those are phenomenal. And I think that if we can bring the price down, we're talking about, and when we're talking about phenomenal costs, I'm saying the remittance costs can vary widely, anywhere from 2% to 26%, depending on the corridor. And one of the biggest problems there is a lack of competition. And whenever somebody new opens up a competitive market, then there are people who are acting a bit like monopolies and dropping their transaction costs in those corridors to drive people out of the market and then driving the cost back up again. So instead of transactions costing what, $12 to send $200 to the Philippines, with crypto it can be done for cents. Okay,
so on that point, we're talking about usually poorer people that are working abroad, sending remittances home. Werner, you know, if you're doing that sort of thing, you know, you're thinking about the dangers of going into cryptocurrency. You're probably thinking, is this safe? This is a question from Inticab on the call. What's the safest way to own Bitcoin or any cryptocurrency? And we'd also like to hear about perspectives on where the best places are to buy cryptocurrency.
Sure. I think the first bit, though, with regard to remittances and cryptocurrency, I just want to add that I think in a lot of emerging markets, what you might find some stage in the future is actually that a digital currency is just the rail underpinning that cross-border transfer, that remittance transfer. We'll have the sender, for instance, in Hong Kong, give Hong Kong dollars, that will get converted maybe into a digital currency like Bitcoin or Ripple. That gets transferred to the Philippines, and it gets converted back into Filipino peso. So they actually needn't be aware of the digital currency that underpins it. But then, digital currencies these days, if you actually wanted to get a hold of it, there's three ways basically to get it. The first one is to swap your labor or goods and services, and sell it for Bitcoin. Now, you probably won't find a lot of employers that are willing to pay you in Bitcoin or other digital currencies because there's complicated tax and accounting impact on them. But there's a lot of online stores that accepts it as a digital payment. But the second way then is, Anish went into a lot of detail with this, and that is to mine Bitcoin or mine digital currencies. And just in utter layman's terms, it is the verification of transactions. And let's say I'm sending 1 Bitcoin from me to you. That transaction gets broadcast all over the network, and the people responsible for verifying that transaction, they earn a little bit of Bitcoin in doing so. But the problem is this is a very technical thing, and it requires a lot of processing power, so a lot of expensive equipment. So for the average person, and this is the majority of Bitcoin that gets traded and bought, is to just buy it with your local currency. So in most countries, it's a completely different game today than it has been like 2 years or 4 years ago. But right now, you have in most countries a somewhat reputable Bitcoin platform or Bitcoin exchange. And what you'll do is you'll sign up for an account there, and it will allow you to move from the traditional financial system into digital currency. So this is our core business, but we're obviously not active in every country around the world. So people might need to shop around. It's also difficult to make a recommendation. Do your research on who you use. But basically, you will make a banking transfer or some sort of transfer from your local currency onto the platform, and there it will get traded at the current rate of exchange into Bitcoin, and then you will have this digital currency. Usually, Bitcoin is also the onboarding step to other digital currencies, because Bitcoin platforms are the ones with the longest history. There's a lot of fiat or local currency platforms that convert into Bitcoin. But once you have Bitcoin, you can use that to buy any of the 800 other digital currencies out there. But people should just do their research when they comparing these platforms.
Okay, we've got a couple of minutes left. We've got lots of questions still on the chat, so we will turn over to Twitter to answer some of those from Anita on ICOs and some other questions on hacking. But one really lovely question that came through before the webinar was, what skills can my children learn during their college or university years to help prepare for a blockchain or AI-driven future? And I just really want to ask very briefly, 20 seconds each, to the panelists. Werner.
Learn how money works. That is the most important thing. How money works and how the transfer of value works between people currently.
Anish.
I would ask them to learn maths. The whole of cryptocurrency and AI is based on linear algebra and other branches of maths.
Brian, you're laughing.
I am. I say philosophy and coding, because technology is advancing rapidly and must be understood for participation. But technology without the wisdom to shape it and wield it for the greater good, to me, is both a waste and a tragedy.
Magic. Werner. Federico. You're muted.
Yeah, so I studied philosophy, and I think that this is going to be a skill that is going to be very useful in the future, because when everything changes so fast, the ability to think is going to help you adapt to whatever comes.
Exactly.
And Vanessa.
Engineer, economy, and philosophy.
Okay. So if there's any children listening and watching this, there's your guidance. It's kind of a cross academic discipline there. But a really huge thanks to all of our experts for getting across what are hugely complex topics in a very short amount of time. I've certainly learned a huge amount today. So a virtual round of applause for Vanessa Grellet, Werner van Rooyen, Anish Mohammed, Brian Iselin, and Federico Ast, and thanks to the OnFrontiers team for hosting this really fascinating discussion, and to everyone out there for great questions and for your engagement on the chat. We will be sending a video of this out to all participants, so if you missed something, you'll be able to go back and view it, along with the profiles on onfrontiers.com, where you'll be able to see the panelists and their thoughts on different topics. Please also let us know your thoughts on the topics that we've discussed today by tweeting on the #ExpertChat. Thank you very much, everyone.